Good morning from London. Good afternoon, Sri Lanka. Good evening, Australia. This is William Rezel speaking from London. I'm your moderator for this event. The Sri Lanka real estate market update and post-COVID-19 outlook. Let's give a couple of minutes for everybody to settle down, and we can take it from there. If you need to ask any questions, you could, there's a chat line at the bottom. You can write those questions down, type those questions in, and we'll ask them from the panel at that time. Okay, so let's get the show on the road then. This webinar has been organized by the Research Intelligence Unit, the RIU, in association with the Sri Lanka International Chamber of Commerce. This is the first in the series of these types of webinars and is complimentary on this occasion. The RIU is a company with offices in the UK, Sri Lanka, and the Maldives, and has a 17-year track record of providing research and advisory services to both the public and private sectors. The RIU published the Big Issue magazine for 11 years, and early this year renamed it Big Life. It has been rebranded and repositioned in order to keep pace with rapidly changing times, no more rapid than the present COVID-19 pandemic. The quarterly magazine has an exciting array of articles covering a wide spectrum of topics, from present situations to sustainable development goals, the new ferry service launched by the Sri Lanka Inland Water Transport Division, construction, real estate, diet, health and fitness, and much, much more. The team at the RIU has and will continue to support positive endeavors in Sri Lanka by highlighting concerns and spreading awareness on a wide range of topics. A very interesting report that was published recently was the launch of the RIU Maldives Country Report 2019. This issue has a number of exclusive research articles that cover key economic growth sectors such as the real estate market and sustainable living. We have today an industry expert panel, eminent professionals who will answer your questions and make presentations. So let us get this webinar underway, and to begin with, let me now introduce you to Mr. Sheanath, Soysa, who is the Honorary Treasurer of the Sri Lanka International Chamber of Commerce. Sheanath is a financial services professional skilled in developing performance-oriented teams. He is a self-starter with proven track record in corporate management, international business development, and operations with a global perspective and cross-culture skills. He has over 20 years professional experience in investment, corporate banking, and financial leasing sectors in the USA and Sri Lanka. He has an MBA from the American Graduate School of International Management, Thunderbird, Arizona, and a Bachelor of Science degree from the Truman State University in Missouri. He worked as Director General and General Manager of Ceylon Merchant Leasing PLC, and is a key part of the team tasked with incorporating Ceylon Merchant Leasing PLC. He also functioned as the first Director General Manager of the company with overall operational responsibility. That is the first Director General Manager. He was elected Honorary Treasurer of the International Chamber of Commerce in 2011. And he holds this position whilst continuing his work as an independent financial consultant. Sheanath, over to you.
It is my pleasure to introduce the International Chamber of Commerce and the Research Intelligence Unit. ICC was founded in 1919 after the First World War to strengthen the multilateral trading relationships, thereby reducing the threat to trade-related wars. Last year, as ICC celebrated the 100th anniversary, it has a presence in over 140 countries, with a total membership of over 6.5 million businesses. The Sri Lankan chapter, which was established 62 years ago, and today has over 300 companies spanning from quoted blue chips to SMEs engaged in international trade and is headed by Mr. Roshan Madhubala, has been an active member of ICC Sri Lanka for some time, and in 2019, ICC partnered with RIU in its roadshow to London in order to promote Sri Lankan realtors in UK. RIU is a pioneering research house headquartered in Sri Lanka with operations in UK, Maldives, and Singapore. Once again, webinars in order to engage with the business community of Sri Lanka. ICC is happy to partner with them in this important endeavor. Thank you. Hello.
Hello, can you hear me now?
Yeah.
Okay, good. Thank you, Sheanath. Thank you for that brief but introduction to your organization. And we will now move on to Dr. Anil Priyanka Badritane, who is a housing finance specialist and corporate executive, who has a track record of professional excellence in the UK, Sri Lanka, and the Maldives. It includes the Housing Corporation of England and Wales, the Halifax Group, HDFC Bank of Sri Lanka, and IFC partner company HDFC PLC in the Maldives, where he served as managing director. Presently, he serves as an executive director of Capital Investment Maldives, a senior business consultant for the RIU, and is the director of Finlay's Maldives Limited. He is a life member of the Association of Professional Bankers of Sri Lanka, a certified professional marketer of the Asia Pacific Marketing Federation, fellow of the Sri Lanka Institute of Marketing, and holds an MBA from the Postgraduate Institute of Management of the University of Sri Jawaharlal, and a PhD from the University of Kelaniya. Dr. Priyanka.
Thank you, William. I'd like to welcome you all to this webinar. It's happening at a very useful time because I think now the world has lived with this COVID-19 virus for about 5 months. And in Sri Lanka, we started having a serious issue from March this year. In fact, the real estate market and the new real, post-COVID-19, the new real, is something that we're going to discuss today. And I think it's going to be useful to the people who are in the trade, that is the developers, as well as now from the banking side. I would like to touch on the financial crisis that is kind of looming, and how the real estate market would be impacted by that. And I think even before COVID-19, the real estate market in Sri Lanka was showing signs of stress due to maybe oversupply or supply in the wrong places, etc. But I think the post-COVID is going to be an interesting period for Sri Lanka. Somehow the diaspora, we have about 2 million people living outside of Sri Lanka. Most of them are actually working like on jobs where they would eventually return to the country. There are some who are settled abroad, and I think there's a perception, when you compare the European example and USA and all these places, that Sri Lanka has somehow managed COVID-19 much better than some of these other places. From the diaspora, there is a kind of a inquiry whether they could come back and settle down. How this is going to impact on the market is something I don't think we've exactly found out. But there was an interesting, I think, exercise done just prior to the outbreak of COVID-19. I think it was actually designed to gauge the perception of people who are living abroad about Sri Lankan real estate market, where they would like to buy, what type of property they would prefer. So that was done by RIU, and Roshan took the lead in doing that. So I think probably he would share some of the findings of that as well. So it's going to be an interesting webinar, and I think first of its kind, as William said, and at a really useful time, because we need to look at how we're going to survive after COVID-19, especially the financial world, which is a bit pensive at the moment. Okay, thank you very much. I look forward to the panel discussion later. Okay.
Thank you, Dr. Anil. Thank you for your candid views on the real estate market in Sri Lanka before and after COVID-19 and its impact today and the foreseeable future. Right. Our next presenter is Roshan Madhubala, who is the founding director of the RIU, which has its offices in London, Colombo, and the Maldives. In advisory and consulting, Roshan has headed multiple research teams, authored many dozens of international publications, and produced multifarious country reports for emerging and developed markets, specializing in several sectors, including real estate-related investments. As head of the RIU, he has also served as a consultant, macroeconomics at the Asian Development Bank, consultant at the World Bank, several Sri Lankan government ministries, and several international major banks. He is also the founder and chief editor of the Big Issue, Sri Lanka magazine, and founding director of the Real Estate Intelligence Unit. Formerly, he was a consultant at the Office of the Advisor to the Prime Minister of Sri Lanka, consultant at the Commonwealth Secretariat in London, and editor at Penwell Corporation in the UK. Roshan, over to you for your presentation.
Thank you, William. Thank you very much, and welcome everybody. I think William kicked off right on the dot. So I think there was, not everyone was present. So as William said at the beginning, this is the first initiative that we're doing from the RIU in terms of a webinar. First of many, and it'll be part of our ongoing services as we move forward in the new reality. Let me not waste any time, and I'll get straight to the PowerPoint. I believe that the presentation is on view, right? Yeah. Correct? Yes, okay. Let me actually begin by saying that I'm going to have to run through this very quickly. There are some 40 slides to squeeze into 20 minutes. So do forgive me if I'm going to skip through this a bit quickly. I'll try to focus more on the more important things. And essentially, we do have data and some new findings that we've done in the last couple of months, which I'll share with you now. Going through history, you'll see that this is nothing new. We've had very, very serious epidemics, pandemics, and plagues in our past. And most notably, we had one 100 years ago, which is called the Spanish flu, which is estimated to kill up to 50 million people globally and affected half the world population. So as humankind, we have come through difficult situations in the past, and I'm sure we will do this time. So I'm going to just touch on the health aspects first, because in order to look at the economic impact and then the real estate impact, we have to get a very firm handle on the health aspects, which are very much entwined. So the research team at RIU, we looked at per capita infections throughout the world. And we see here that the most affected countries are in Western Europe. For example, in Spain, 1 person in every 195 people has been infected with the virus. So the disease prevalence is very, very high across Western Europe and the USA. And if you go across to countries like India and Pakistan, the prevalence is much lower, 1 in 40,000. Of course, there are a lot of inconsistencies in terms of reporting, testing, etc. But this is using the WHO data that we're dealing with. Similarly, you look at fatality rates and morbidity rates is much higher in Western Europe than it is in the rest of the world. One encouraging sign you'll see here is that according to the data from China, more than some 95% of people have recovered, and about 5% of people have succumbed, but the data indicates that China has come through the pandemic. Similarly, if you go to other countries, there's a lot of people still going through it. How does COVID differ from the recent SARS, MERS, Ebola, etc.? Well, if you look at the first chart, you see that the prevalence, the disease acceleration rate is much higher with COVID, whereas the fatality rate is actually much lower at about 5–6%. So it's very dangerous due to the fact that it's reported to be very prevalent, and it's spreading very, very fast. You can compare that to the HIV pandemic of the 80s and the 90s, actually, more so, that it actually took a lot more fatalities, up to 40%, and hit many parts of the world very severely, including the economies of sub-Saharan African countries in particular. Let's look at Sri Lanka. When we first picked up on this...
Sorry, Roshan.
Yeah.
Can I interrupt you?
Yeah.
Apparently, no one can see your presentation.
What?
They can't see it.
I can see it.
No, the panelists can, but the audience can't.
I say.
Why is that?
I don't know. That's why I'm just checking.
Oh, Malinga?
No, Roshan, everyone can see it. I think it's
everyone
just,
can see now. Okay.
It's just some devices maybe due to...
okay.
Yeah, it's an old
Shall I
device.
carry on?
Yeah, sorry. Carry on. Thank you. Carry on. Yeah.
All right. Yes, so if you look at the first map, COVID detections in Sri Lanka up to the end of March, you'll see that there's a very close correlation with tourism spread around the West Coast in particular. But by the end of April, which is like last week, we've seen that it spread much more rapidly throughout the country. And I think one of the main reasons is due to the spread among some Navy personnel who then took it back to their villages, etc. By regional standards, Sri Lanka is, in terms of per capita infections, we have 1 in every 32,000 people infected, which is about probably average for South Asia. By contrast, Nepal has a much lower infection rate, 1 in 500,000 people. In Sri Lanka, we've seen that 139 people have recovered out of the total caseload. But we do have some concerns because Sri Lanka in a regional context has an aging population. Some 10% of Sri Lanka's population is above the age of 65. So the vulnerability factor is something to be concerned about. Okay, what's been happening in the economy since the emergence of COVID? According to most international development agencies, we're looking at a drop in economic growth this year down to about 1.1%. This could still be quite optimistic depending on how long things drag on for. 1.1% for 2020 GDP growth rate wouldn't be disastrous, but I think it's too early to actually pinpoint a figure. The forecast for the following year seems to be a lot more optimistic as industries bounce back. Inflation up to the end of last month has been somewhat steady. Tourism arrivals, obviously, as you would expect, has slumped by 70%. Yeah, so which actually is comparable to the things, how bad it was back in April last year. If you recall, after the terror attack, tourism slumped by a similar amount. FDI flows for last year was down a little bit, and we do not expect anything positive here, as many people will be cash strapped and not really be looking to engage in investing in emerging markets. It will be a downward pressure. You'll also see that the rupee has been depreciating against the dollar. According to the Forex experts that we've been speaking to, we feel the government will hold it below 200 rupees per dollar. And fundamentally, what we're going to see is the government will try to change the composition of our balance of trade, and there'll be a switch towards import substitution, self-sufficiency, etc. So the actual balance of trade may change in the medium term. Interest rates, downward pressure all the way in the past few months is a global trend. And this will continue probably to happen as governments try to stimulate the economies back. In Sri Lanka is no different. You can see that the trend is, has been going down for the most part. The share market was one of the first sectors to be hit back in March. You can see that foreigners have, for the most part, been leaving the market in terms of the situation here, as they've looked at safer havens, possibly. The 20% plunge in the ASPI was recorded up to 31st of March. There's another Purchasing Managers Index that I'm just going to quickly show you, where the sentiments look like as bad as it was in April 2019. The fact that Sri Lanka has somewhat bounced back from that gives us hope that as an economy, it's a very resilient economy, and that we are able to recover from the current situation as well. I'm just going to quickly give you an insight into a diaspora survey of 300 high net worth individuals living across the world with a connection to Sri Lanka. And we asked them their view on how COVID will affect the global economy. And you can see that for the most part, almost 70 people expected a dip in the global economy of 2.5%. Their view on Sri Lanka was slightly less pessimistic, feeling that about just over 60% felt that the economy would be hit by more than 2.5%. Tourism, as everyone knows, is one of the top and most important industries for the island economy. Unfortunately, it was hit last year, and the revenue compared to 2018 was down, and this year looks like it's going to be declining further, unfortunately. The ADB estimates that the decline in tourism will be from $107 million to 319, as tourism arrivals will slump throughout most of the year. A quick look at a chart from The Economist, which has actually highlighted Sri Lanka as a high-risk emerging economy in terms of public debt, borrowing, etc., where we have been placed 61 out of 66 emerging economies. This is actually a reflection of the state of the public sector more than the Sri Lankan private sector, just to be clear. A quick look at the sectors. I think I'm running out of time, so I'll have to rush through this very quickly. Agriculture will see a move towards self-sufficiency, less imports, and early signs are that people are looking to invest in agriculture in Sri Lanka. Similarly, tea has been hit because of the export markets. However, auctions have been taking place with new technology, and early indications are that tea will have a positive impact on your health and will result in some kind of a demand stimulation, which should last through the short and medium term. Construction industry will be hit to a great extent in terms of funding, but we do see that workers are starting to come in as of today, actually, as the curfew gets lifted. The CEB in Sri Lanka will probably benefit from lower oil prices, as with the private health sector, which we would expect to see new investment going into various aspects of hygiene, equipment, as well as indigenous medicines, which seem to be proving quite effective in combating the pandemic. Automotive sectors, wholesale will be hit by supply chain disruptions. Banking and finance, we feel that will grow based on a shift towards online banking on the part of many skeptics who had previously not actually taken the plunge to shift their banking activity to online. However, there will be higher default rates in terms of business loans, etc., for the banking sector. So to summarize this, there have been winners so far. For example, Amazon have reported a 32% hike in visits. This is globally now. Amazon have also got a controlling stake of Whole Foods in the UK, and they have been growing during the lockdown, and they have been hiring more staff, etc. So we will see a shift possibly towards larger multinational corporations as they will be able to adjust and meet the new environment much, much better than the SMEs in many cases. So winners will be banking, aspects of banking, e-tailing, telecom, agriculture, healthcare, large MNCs. And we have also identified that people are switching a little bit towards gold, also real estate, tech stocks, and currencies. Travel, tourism, airlines, retail, leisure, personal care services, and small businesses have been the first to be affected. I'm just going to run you through some real estate data that we have been collecting. As of now, we do have, according to RIU's own classification, some 15,000 units of luxury apartments covering tier 1, tier 2, and tier 3. The current absorption rates for these apartments are 60%, which means 60% of the units that are under construction have already been sold. We're actually coming out of a situation in 2019 that there was a lot of confusion in the market due to policy inconsistencies on VAT, etc. And 2020 did begin with a lot of optimism as a new political regime started to make things a lot clearer in terms of taxation and policy. So we were looking at a resurgence in the real estate market, which unfortunately has been stifled now with COVID. The table on your left shows individual luxury apartment projects with their respective absorption rates. I'll come to this later in terms of what's driving demand now. Quick look at commercial real estate. So according to our own data and databases, we have 1.9 million square feet of grade A space, which accounts for about 30% of total grade A and grade B space, commercial space in Colombo. Most of this commercial space at the high end is located in Colombo 2 and Colombo 1 and Colombo 3, with Colombo 5 coming onto the map with the progress of the Havelock City Towers, which will be coming in. For many years, demand for grade A has been ahead of supply, primarily because developers over the last 10 years have opted to develop residential real estate for the reason that the returns on residential real estate was about 3 to 5 years as compared to commercial real estate, which takes a much longer period. to deliver a return. However, in the last few years, we've seen a market equilibrium in the residential as commercial real estate developers have come in and initiated new projects. So we see a change in terms of supply catching up with demand. For much of the last 10 years, the grade A buildings in and around Colombo have had 90 to 95% occupancy, which is a very good reflection of the market demand for high-end office space. IT, telecom, etc. We will continue to demand high-end office space in the next few quarters. We can also note that with the currency depreciation, large companies who earn their money in US dollars will find the local rates quite attractive in terms of their cost. Our data and research up to now indicates that many landowners and developers are negotiating with their tenants on rents and terms because there are lots of demands on the part of tenants for grace periods, concessions, etc. We have noted that already many of the serviced office space providers have given discounts and concessions to their tenants. So that's a trend that we expect will dominate the market here in Colombo in the next 2 or 3 quarters. The way that people look at commercial office space will also change as the shift towards working from home will make people realize that, you know, hey, a lot of this can be done from a home office and people get used to that. We at RIU had already implemented a work from home policy, and for some people to have 1 day a week where they work from home. So that's something we feel will catch on for the rest of 2020. There's also a huge demand for online platforms and buildings will be required to introduce sanitation, equipment, and practices. Right, so I'm running out of time. I'm just quickly going to share a few highlights from the Diasporic Survey that we did in March. So it's very recent. Sri Lanka has what we estimate to be 2 million people living around the world who have a bank account or a property in Sri Lanka, and most of them are in the UK, Australia, and Canada. We've asked them about their property purchase in Sri Lanka. So 1 in 4 in our survey have previously purchased a property here. And almost half are interested in investing. This information is in March, so it's post-COVID. So I think it's very relevant. And more than half the people would like to invest in Sri Lanka as an investment. And the timeline they're looking at is in the next 1 to 3 years. We also asked them about their approach and their attitude towards the lockdown, and the vast majority, you can see there, 71%, agreed that the government does need to lock down quite hard and severely with the measures of curfew, etc. It's also encouraging, as you see, that 21% of people will not change their mind on the real estate decision that they've had. So they've decided to invest in Sri Lanka, and 21% will do so regardless of what's been happening. We also see that people are also switching to gold, certain stocks and currencies, in addition to real estate as well. Excuse me. So we are getting a very good handle on how things are going to pan out, what the effects are. Just a quick thought about the cause of things. So there are a lot of conspiracy theories, etc., out there. You know, the alternative ideas about why we're here, what's going on, etc. And in times of uncertainty like this, we do look at, as human beings, very broad explanations for things. So we haven't looked at this. but it's very much something that people will want to research and learn about. However, we did look at the 5G theory. The research team at RIU had a look at countries that are very advanced in implementing 5G technology. And you can see there for yourself that of these 11 countries, South Korea, UK, USA, and Germany are the most advanced in terms of implementing 5G technology, and they're also most affected. China is also there, and Wuhan in particular, I believe, is most affected. Another thing we've been doing over the last couple of months is monitoring the climate versus disease prevalence. And you will see that there's a very clear correlation between the climates and disease prevalence, where in March, the cutoff was about 15 degrees Celsius. Countries that were warmer were having a much lower disease prevalence than the colder countries. By April, many of these countries are getting warmer, so the signs are that that relationship is valid, but we will continue to monitor the impact of sunshine and climate on COVID-19 per capita, yeah. So we would hope that a warm summer in Europe will help to eliminate or at least minimize disease prevalence. So to just summarize very quickly, residential real estate will have downward pressures, of course, but we'll also have opportunities, which we hope our expert panel will discuss at length. There'll be things like a drop in tourism, which was always a cross-fertilizing factor in the local real estate market, will be close to zero, as is business activity. But opportunities for people to have a better exchange rate, pick up bargains, and the interest rates being low will be something that residential real estate developers would want to look at. Similarly, commercial real estate will have to adjust and can bounce back, we feel, within a few quarters. Retail sector will have to adjust a lot more because malls will be hit very, very hard in the short term. But we predict will bounce back sooner than leisure, which unfortunately will have a longer recovery period. Sorry for taking so long. We're just sharing some of our ongoing research. So if everyone wants to find out more, please do get in touch with the Research Intelligence Unit, and we'll try to help you with your questions. Thank you again. Cheers, William. Over to you.
Thank you, Roshan. And firstly, my apologies for interrupting you, but it was important that all the audience could watch your presentation, and that's why I made the interruption. Anyway, that was a very comprehensive report, presentation on the impact of COVID-19, and it covered all aspects of the economy, including real estate, banking and finance, the automotive industry, construction, health, tourism, future trends, etc. There have been requests from people who want to see that presentation, who want to receive that presentation. I suppose in our final summary, we can tell them how to go about doing that. Right now, we are very privileged to have 4 very eminent professionals who will answer questions, your questions. They are Engineer Ranjit Gunathileke. Ranjit is the president of the Chamber of Construction Industry and the CEO of the Sankan Group of companies covering subsidiaries and associate companies in Sri Lanka and overseas. He is also a management board member of the Construction Industry Development Authority and advisory committee member of the Export Development Board. He qualified as a professional engineer in both the Institute of Civil Engineers in the United Kingdom and the Institute of Engineers in Sri Lanka. We also have Mr. Nayana Mawilmada, Nayana is the Executive Vice President and Sector Head of the property group of John Keells Holdings, which, as everyone knows, is the largest real estate developer in Sri Lanka. He has extensive international experience in planning, facilitating, and managing large-scale urban development and infrastructure projects across 15 countries and working with both the private and public domains. His academic training includes an MBA from Harvard Business School, a Master of City Planning from the Massachusetts Institute of Technology, and a Bachelor of Architecture from Hampton University in the USA. We also have Mrs. Rajitha Jayasuriya. Rajitha is the, hold on, there's something on my computer. Rajitha is the Director of Sales and Marketing of Bluestar Realties Private Limited, which is a group member of Access Engineering PLC. She is responsible for the overall sales and marketing, branding, process development, client relationship management across the board, and overall business development, including strengthening relationships with brokers and expanding the portfolio of the company to promote the Access brand and sell 242 luxury apartments in the suburbs of Colombo. I understand that she is in one of these luxury apartments right now. She has over 20 years hands-on experience in the real estate industry and 8 years experience in the BPO industry of Sri Lanka. She commenced her career as an assistant sales manager in one of the largest real estate conglomerates in Sri Lanka, selling homes. She has covered the responsibilities of the entire sales process of housing and apartment projects, including 250 villas with neighborhoods and recreational facilities. One other member of the panel is Mr. Onesh Subasinghe. He is the Managing Director of Ekroma Realtors OPEX Holdings. He had the vision to enhance the services of the agricultural community of Sri Lanka, which made him diversify into the import of agrochemicals and specialty fertilizers. This enabled him to supply all agricultural products to farmers and dealers under one roof. His recent innovation has been to manufacture high-tech liquid fertilizers for local consumption and for export market as well. Onesh constructed a boutique-style condo apartment complex, Elegant 16, located in Colombo 5. At present, he's in the midst of developing a 20-floor, 180,000 square foot grade A office space in Colombo 2, which should be completed by May 2021. He has a wide knowledge on real estate development and has plans to do many more projects in the future. He has a BSc in Applied Economics and Business Management from Cornell University, USA. Welcome the panel. Thank you very much for being here. Now, we have already had some questions sent to us, so we shall kick off this by asking Ranjit and Nayana. So Ranjit and Nayana, how soon do you think it will be before it's business as usual for the construction and real estate sectors in Sri Lanka?
Nana, can I answer? Because, thank you, William. I think two things. One is the construction. Construction should be in order the way that things are going within next 3 months, because once you got to follow certain formalities, the worst is to follow the formalities or the government rules and regulations with lower grades of people and keep this COVID standards. But the real estate, when you see, it will take much more time unless something from the banking sector is coming to the real estate developers and give a push, because immediately I feel there is a bit of a, people are busy with some other work as priorities rather than going and investing in apartments or buying houses, so that it might take a longer period. So if the banks come and push them to finish it, then when the people want these apartments or the house dwelling units, then it will be ready. That's what I feel. So the real estate things to come in order, I think it might take at least about 6 months.
Sorry. Yeah. So I tend to generally agree with Ranjit. I think though, I think we're in for a little longer haul. I think it's difficult to look at. I mean, I'll speak mostly on real estate, but I think you can't look at the entire sector as one massive thing. You probably need to break it down. So if you look at what will happen in office, maybe retail, and perhaps residential separately, I think the least affected is most likely to be office, because I think businesses will generally continue. We will probably see some changes in patterns going on in kind of workspace arrangements, kind of the shift towards open workspaces and much more kind of intimate work environments will probably go backwards a little bit, at least temporarily. So you might see a little change in configurations, but general demand for office should sustain. That said, I think we will have a few firms that will struggle to pay rents and so on. So you might see a temporary kind of adjustment in where demand goes. But again, I think office will recover in tandem pretty much with what happens in the general economy. And I think it'll maybe lag even. So it'll go down faster. Sorry, it'll go down slower than the overall economy. That's my personal sense. Retail, I think, is going to struggle for a little while because it's very, very closely linked to leisure and hotels and the revenue pools there, as well as discretionary income. And the indications are that will take a little while globally to recover. And I think Sri Lanka will be no stranger to that as well, particularly given some of the issues we might have with our balance of payments and restrictions on imports and so on. So I think retail will tend to struggle a little bit. I would say for the next 6 months easily, retail most likely will struggle. But after that, hopefully we should start to see a rebound. Residential is a little bit more complex. Residential, again, you can kind of break it down. I would say the least impacted will be the lowest cost residential. You know, the intrinsic kind of base load of demand, if you will, for the economy. So I think the lower end, much more affordable apartments will move. I think will get back into play reasonably quickly. Of course, it will get impacted with any ripple effects with the overall economy and you know, job cuts and pay cuts and so on. But I think my sense is that will bounce back sooner. But then the higher end will take a little bit longer because again, the higher end tends to get linked very much to leisure-related kind of investments as well. So I think it's a continuum, and I would say residential real estate again. You know, I think it's going to be say 6 months to 12 months at least so when we start to see a real uptick. I just want to qualify that though, because I feel like in the medium term, Sri Lanka still has a very, very strong play. I think the fundamentals you know, can be quite positive. Of course, we were starting to see a nice resurgence beginning of the year, and that unfortunately we are where we are. But I think the fundamentals of the kind of transformation that's happening in the city is probably going to continue. So it's almost a pause for a few months. I would say 6 to 12 months, and then it's a bit of a wait and see. That's what I would say.
Thank you, Nayana. Thank you, Ranjit. I'd now like to direct the next question to Rajitha and Onesh. How do you see the current and expected future delays impacting the developers' sales strategies? So how do you see the current and expected future delays impacting sales strategies. This is to Rajitha and Onesh.
Rajitha, do you want to take it first or shall I speak?
Shall I go ahead?
Yeah, go ahead. Go ahead, Rajitha.
All right. So basically, when we look at the market, we have had a situation, if you take 2019, so 2019 itself caused us impact in our sales strategies, because if you really look at the last 18 months, we have faced many challenges in the industry, like political instability, policy changes of imposition of VAT and exemption of VAT, where the customer was always affected with the decisions that they had to make when we made our presentations to customers. And then we had a situation with the Easter Sunday bombing in April 2019. Then we had presidential elections in December. Then, as well said by Nayana, we were really looking forward to a very, very positive 2020 when we began in January, and our sales strategies that we had forecasted really went rather in a very negative manner even in 2019, because we start sales by doing our branding and marketing, and then we go on to our early bird sales, then we go on to a mid-cycle, and then you have a thing called the close cycle. So we were coming into our close cycle when 2020 began in terms of our project. What happened was even our mid-cycle was, our sales strategy was badly impacted. So what happened was we had to restructure our entire sales force, then the strategies of sales and marketing, and then we positively started our campaign in January. And then came 15 January, we had very good sales. February was very good for us. And we concluded all our 2-bedroom apartments was fully sold. And we were looking forward to continuing in March when this happened. And well, it's a force major situation in terms of construction delay. And sales strategy definitely gets impacted when there is a construction delay. Well, then again, looking back, we have signed sales and purchase agreements with clients indicating the date of completion of the project, and then there are delays. Then another thing was with the curfew, our sites, you know, the construction site is totally under lockdown. It's curfew, you can't work. So we are confined in that regard. We have a 2 months delay, which also is another situation for us for our imports. And, you know, it was a great achievement where we were able to clear most of our containers. During the curfew, we cleared many of our shipments because now we are at the close cycle and doing our finishes. So all these things, fortunately, we had our model apartment ready, and we had our sales lined up. And we, from a sales perspective, as the head of sales and marketing for this particular project, we continued our digital marketing campaigns. We did not stop because we also knew that people need more time to log on to internet and do their work. People, we had many, we have been advertising on Lanka Property Web. We signed up for contract for 6 months and we continued the contract. We did not stop. So we have had many inquiries, and my sales team has been responding to all these inquiries throughout the 50 days of curfew, working from home. And we are looking now positively towards COVID-19 to not to end completely, but as we have read in media and as well said by others, people are looking at Sri Lanka, especially the senior citizens. Even my sales in the month of February were 2 from US and 1 from Canada. They're all senior citizens who are wanting to come back and reside in Sri Lanka. It's the end user market that I'm tapping. So my sales strategy was affected, but I'm looking forward positively to, you know, to the future, because I feel that because I'm at the end of a project, so our project delay of is also forecasted in the sales and purchase agreement, a certain amount of delay. So with the product that is ready in the market, its sales are much easier, but definitely it has impacted us throughout 2019, and now we began 2020 with the same situation.
That's basically my perspective of the situation. That's it from me.
Hello. Hello.
Yes. Onesh, it's your turn now.
All right. So, hi, good afternoon, everyone. Can you see me, Vilya? All right. So let me actually break down the real estate sector into 4 sectors. So you have residential, commercial, retail, and hospitality. So every sector is going to be affected differently. You can't take it from a macro perspective and think, you can't apply the same rationale for each sector. So you got to break it down and then evaluate and analyze and see how best to get through the COVID-19 unprecedented global pandemic. Okay, so for residential, short term, definitely it's a buyer's market. So most of the developers are worried and they're going for distressed sales. However, buyers need to be wary and they need to be on guard. And I would advise for buyers to go for completed apartments or projects that are nearing completion. You always need to look at the COC and the CMA, and if you can get the deeds to be transferred, you're looking at a zero risk proposition. In addition, I think for the future, developers would tend to go for small apartment complexes with maybe 3 to 4 units in one floor, so that you could limit the risk of virus transmission. In addition, I think most of the trend would be for developers to make smaller apartments that are more affordable, so that most of the budget conscious consumers could actually afford it. In terms of commercial, I feel the demand is still robust, but we need to make a lot of changes. I'm currently doing a grade A office space by the name of Ekroma Fortune. So the key would be to look at the ventilation and the air filtration, because you could get the virus through the air conditioning. So we need to work with our consultants, especially our MEP consultant, and figure out a way how we could filter the air so that there would be no risk of virus transmission. So in addition to that, we also need to look at good hygiene practices, and we need to administer same. So we need to work with proper property management companies who could do that. In terms of sizes, okay, most of the companies are going to downsize. I mean, that's a fact. And also, most people are going to continue to stay and work from home. So that's going to be your new real. However, if you look at the ratio in terms of grade A office space, I would say it used to be 1 to 70 per person, 1 to 70 square feet per person, or 1 to 80. So I feel the numbers would increase because you need social distancing to be maintained. So you still need the space. So maybe the new numbers would be 1 to 110 to 120 square feet per person. In addition to that, if you look at co-working, I think co-working space is going to still have a lot of demand, but you won't be able to work in an open space environment because of the virus. I'm talking for the next 12 months until a vaccine is hopefully found. So basically, you would need to have cubicles and people would need to work in isolation mode. So I feel I tend to agree with Nayana. The demand for office space is definitely going to pick up very fast. Already, as per Roshan's information on the research he had conducted, we are already at about 90 to 95% in terms of occupancy. So commercial real estate sector will definitely be the least affected and would bounce back much faster. In terms of retail, definitely retail has a correlation with the tourism sector. So we've seen a lot of brands come in over the last 2 to 3 years to Sri Lanka. We've got a lot of exclusive brands. So we were trying to look at, foreigners who would come here and spend more money, and we were building malls for them. So definitely retail is going to get hit. So the retailers would need to change their product portfolio, introduce products that are more affordable, and look at ways of delivering product to the end consumer. If they have walk-in traffic, they would need to maintain social distancing. There's going to be a lot of challenges, so you need to adapt. Hospitality, definitely hospitality is going to take a hit. It's evident already, and I don't think at least for another 6 months, it'll bounce back. Hopefully September, October onwards, things will start to pick up again, along with the warmer weather. So they would need to also look at, they need to survive. So definitely they would need to look at the local market and to sell rooms to the local market, but at a lower price point, maybe. And also look at food and beverage. So in food and beverage, you've got two components. You could look at delivering as well, but you're not going to cover your cost just by doing that. So you would also need to open up your restaurants at some point. Again, in the past, if you were able to occupy 100 people in a restaurant at any given time, now you would be able to do maybe 50 with the social distancing measures that you need to maintain. So again, hoteliers would need to adapt. It would change. We as clients would need to change as well. So it's going to take some time for everything to get normalized. So essentially, in terms of for future developments, I would say for 3-star hotels with smaller rooms and with self-checkings introduced, and which are accommodation only basis, would be the way to go forward, and also at a lower price point, so that you could always try to manage and cover your cost. So overall, there's definitely going to be an impact, because on the projects that we are currently doing, and for the projects we've completed as well. So we need to be patient, we need to be resilient, and we need to wait it out. And like Roshan said, we've seen pandemics like this, like the Spanish flu in the 1920s. So we are going to recover from this. It's just a matter of time, and we need to adapt and survive this. So that's about it, William, from me.
Thank you. I would like to bring in Nayana, please, to make a comment. Nayana? Hello.
Hi, thanks, William. I just want to push back a little bit, Onesh, on a couple of things. I don't think I agree with you when you say, look, apartment buildings will go back to a 3 to 4 unit per floor kind of setup because of virus contagion. I don't believe that is correct, simply because apartment units are self-contained, and they're really, not a whole lot of because these, HVAC systems are typically separated. I really don't see that panning out that way. That said, I think the office environments completely will transform, and there will be a change in behavior, because that response time is quicker in terms of being able to adjust it. I think what we have to remember in this overall situation is, this is a temporary situation. As Onesh was mentioning, we've had the Spanish flu, and we've had all kinds of stuff, and eventually we will bounce back. And real estate is a long-term asset class, right? So projects that start now will take 4 years. By the time those come out, this thing will be something of the past with a bit of luck. So I think we need to be cautious about overreacting to what will be a short, or maybe even a medium-term phenomena, and fundamentally changing everything around it. My sense of it, and I'm no epidemiologist, but my sense of this is that, if and when we get to a point of two things. One, when testing becomes very economical and very fast and very widely available, things will revert back to normal reasonably fast. And when a vaccine, if and when a vaccine is available, we kind of go back to the status quo with, maybe a little bit of adjustment here and there. So I don't think the residential products will fundamentally change that much, quite honestly. I agree with you, Onesh, though, that I think there will be some blood on the streets. From a customer perspective, it's going to be a bit of buyer beware, because cash flows will be tight over the next 6 to 12 months, and it's worth buyers looking at who's capitalized enough to see project through to its conclusion. And I fully agree with you on that one, Onesh.
Thank you, Nayana. Onesh, did you want to make a comment on that, or can we carry on? Onesh?
So the reason I mentioned about the 3 to 4 apartment configuration, of course, from a developer's standpoint, you got to look at your economies of scale and you got to look at your efficiency. So for certain, I mean, 9 is correct. In the mid to long term, I mean, we might even forget this, and things will be the back to normal. But for the immediate future, I feel if I'm looking at it from a customer's point of view, you still have common areas in any apartment. So the air conditioning is only for the specific units. So people need to use all the common area assets such as the lifts to come in and also, to go to your apartment. So if you're looking at risk purely from a risk perspective, it would be better, in my personal opinion, to look at smaller apartment complexes where you have less people, which means less in terms of virus at this moment. But like Nayana said, in 6 months or 12 months, things would definitely, change. So that's about it. That's my comment.
All right. Thank you. We have a number of questions to finalize to be responded to, and time is catching up with us. This is for Roshan. A quick response, please. What will be the frontline challenges for buyers in this market under the current conditions? Roshan, over to you.
Hi, thank you, William. Very quickly, from a buyer's perspective, that the interest that we have from our clients overseas, the diaspora, as well as non-Sri Lankans who are looking at Sri Lanka, is still there, because you can just note that more Sri Lankans have succumbed to this virus overseas in UK, Australia, USA, etc., than has been the case in Sri Lanka itself. So, as many people, Dr. Priyanka mentioned, Sri Lanka will emerge, hopefully emerge as a safe haven in an international context. So we do feel that there's a huge opportunity with the diaspora, and there's 2 million of active diaspora out there. So many of the questions that we've faced up to now are things like, should we now only consider developments that are completed? Things like what Onesh said, is there a risk for larger ones and smaller ones, etc.? So it's a bit early to be decisive or give you any data to say it's going to be one way or the other. But the next few months will certainly give us a lot of ideas about where things are going in terms of construction, supply chain issues, if there's going to be any further delays in projects, things like that. But certainly, there'll be a lot of bargains. There'll be residential real estate is already the subject of a lot of inquiry from cash-rich companies and individuals in Colombo looking to pick up distressed sales. So things will happen. And it's very difficult to give any advice on a generic level. I think we have to look at things on a case-by-case basis there.
Okay, thank you, Roshan. Now, we have received a number of questions from the audience. There are many questions, and we will endeavor to try and answer all of them before time limit is up. But this is open to all panelists. So one question is about waiving rental for commercial property. What would be the best approach? These to all the panelists. Who would like to answer? Ranjit?
Nayana,
Yeah,
you going to take that?
Yeah, because I was listening carefully of what the other panelists were saying. One thing I agree with Nayana, it's not for the question that you raised. For the Nayana, what I say is we all should see, we should not see what's going to happen tomorrow. We are going to see what's going to happen day after. But the pandemic situation is definitely, it is temporary. Though it is, when I call temporary, it is taking a couple of months, but it's temporary. all our designs, planning, everything we should do for not for this 1 month or 2 month situation. Because pandemic situation coming again another after 100 years. I think during this period, many of us or the people have not spent personally much money, you know, even for their whatever, for the eatables or where they're going out, leisure trips overseas. So a lot of money, I think personally, all these people would have saved. And for the projects, if you take it for residential project apartments, this is the best time for them to invest, because I don't think the developers will raise the prices of these, and for the definitely for the future apartments, they have to raise the prices because everything might go up. So this is an opportunity. But when you ask for this, your question with regard to office space rentals, in the future, these rentals directly linked to the development. The country's development at the moment, as we said, tourism, garment industry, foreign employment, all these sectors are down. But when the country's activities are on, when the things are moving, definitely now after this pandemic situation, it's proved that Sri Lanka is definitely in a very much better geographical location, where for all these, this is the best country in the world. So I think for the developers, investors, they must make use of what is created now, what they are going to do for the future. Thank you.
William, I'd like to just respond to your question, if that's
yes,
okay.
please. Yes.
The direct one on commercial. So I think you'd have to look at commercial. I mean, if you break commercial into office and retail, look at them slightly separately. See, the thing with office is offices never really, office buildings as such, never really completely shut down. So all various offices worked at a much slower keel perhaps, but buildings need to be fully operational and ready for people to come into work. And on that basis, I don't believe there's lots of immediate rent concessions happening in the market. Again, we don't rent a whole lot of office, but that's my sense based on conversations with a few. That said, I think with pressure on firms and the overall economy, any leases that are coming into renewal cycles, you might see some downward pressure on rental yields in the short term. That's my sense of that. The retail, though, is slightly different because malls across the country effectively closed, and I think most malls, ours included, for the period where curfew was on, have granted concessions to the tenants because the buildings were closed and they couldn't open their shops. Of course, it's a question to see how things pan out in the next few months, and how we work with tenants to make sure that they can get their businesses back up as well. But I think retail is a bit of a more of a ramp up story than office.
Thank you. And a lot of people are interested in Port City and what will happen in the future. Can any of you respond to that? Go on, Nayana. Yeah.
Yeah. So I think the best people to ask are Port City themselves. But if I was to kind of take a view, so the Port City. The question is, how much foreign capital will cross to riskier kind of domains. So a lot of this really depends on, over the next 6 months, how the government responds, what kinds of incentives, what kinds of measures they put in to actually make Port City a really, really compelling proposition, and by extension, makes Sri Lanka's kind of whole hub strategy a very compelling medium to long term proposition. I think in the short term, just like the entire industry, I think things will be a little bit sluggish, but Port City's still a bit slow on the uptake. They haven't really started selling any real estate to my knowledge. So again, it's a very, very long-term project. I think they will survive this and come out of the other side. They've got deep enough pockets, I believe, to do that. But it'll be interesting to watch what stimulus comes in with the government and whether that really helps to attract new foreign capital into the market. And if it comes into port city, certainly it will come to the rest of the industry as well. So we're watching that very, very carefully to see what the government will do to try to liberalize and allow in a little bit more foreign investment.
Thank you for that. We have got roughly 15 minutes left, and there are many, many questions about rentals. Can somebody else comment on that? Rentals in and around Colombo and outside?
William, is it rentals for commercial or rentals for residential?
Both.
Okay, I'll take it. So actually, let me first look at the rentals for residential. So in real estate, it's all about location, and the rental premiums change from one location to the other. So I would say the first quarter of 2019, we saw our rental yields increasing. Unfortunately, after the Easter bombings, we saw most of the foreign expats leaving Sri Lanka because of fear, and the rental premiums dropped down a little bit. So I think in the immediate short term, definitely, I don't think that people would be looking at renting at a very higher price. So again, it would be a buyer-oriented market, and you have to again look at catering towards the local demand as opposed to foreigners. From a commercial perspective, like I said before, we already have about a 90 to 95% occupancy. I highly doubt that developers would give concessions to the companies because they need to pay the bank loans as well, and it's all about cash flow. So looking at the short to medium term, I think most of the developers were expecting that the rentals will increase. If you take Sri Lanka, for grade A office space, our rental average is about $2.5. So we are actually the third lowest in Asia. Only Chennai in India and Philippines is lower than us. So we are actually an attractive destination for foreign companies to come and rent office space. So definitely, I feel the rental premiums may be stable for a while because already we are at a pretty low price point. But in the future, like Ranjit said, the cost of construction is going to increase because of supply shortages, then exchange rate, the rupee depreciating, and so many other factors. So it'll take time, but developers would need to somehow manage for the short term, and mid-term, hopefully, the rental premiums could increase. Residential market, I can't actually gauge right now because it's too many apartments and at different places. But I feel, again, maybe in another 6 to 12 months, hopefully, the rentals would increase as well. That's about it, Billy.
Thank you. Anyone else? Rajitha, do you want to comment on that?
Rentals in terms of the commercial properties, I can say that most of our project is currently occupied, and when we were completing Access Tower 2, we were fully booked even about 2-3 months ahead of time, and our tenants are still occupying the complex, and that is where we are with commercial property, and we are also looking at another tower for commercial property. And when it comes to residential, so in the apartments of Capital Heights, which is sold by my company and my team, most of our buyers are the end users. Then we do have few guys who have bought for investment and for rentals. And so we are like looking at 6 months in completion. And at that point, I'm pretty sure that the market will open and we will be able to, as said by Nayana and Ranjit, it's not a permanent situation, the pandemic. And then right now, as I was talking to you, I got a text from Australia saying somebody's looking for a house to be rented in Colombo, 3, 5, 4, 5 or 7, and they're happy to rent. So just now, as I was talking, I was watching this. So I think people are looking at renting residential properties. But definitely everybody will look at a good deal, making use of the current situation. There'll be plenty of bargaining on the rents. So immediately we might have to, give it at a bit lower rate, and then within sign up for a lease of like 1 year and then increase the rent depending on the situation.
Right. There are questions on that specific subject about reducing rents. But we have only a few minutes more to go. So there's one last question, please. Do you expect a shift in demand for outer suburb real estate or no change? Anyone want to answer that? Rajitha? Roshan?
Yeah, hi. Am I on? Okay.
Yes.
Before Rajitha speaks, I'll just quickly share some of the findings of a recent survey we did, as I said, with the diaspora. So there is a shift away towards retirement properties as well. So the interest in Colombo can be analyzed in terms of buyer profiles. So there are a lot of kinds of buyers who would like to retire in Sri Lanka and may not want to live in an apartment, because in the West, living in an apartment is not as sought after or as prestigious as it may be in different parts of the world. So there is a growing interest in people who want to live in a beach villa or a country house. Nothing to worry about if you're developing residential property in Colombo, but there is a slight trend, yes.
Yes, so in suburbs also now we have many apartment projects. There are small scale apartment projects as well as projects like what you get on Gudgamo Road, which is the suburb where we are at the moment. Right. So we find that people are also moving towards the suburbs because small scale projects which do not have many facilities are lower in terms of the rent and they have less facilities and less overheads, and they do move in. But projects that have all the facilities also, now there is a consistent rate for rent, and therefore I suppose people will definitely look at moving to the suburbs, because I mean, it doesn't make much of a difference.
William, can I come in on that, please? Hello? I can't hear you, William. So I'm assuming, William?
You've got a quick one, yeah?
Yeah, just very quickly. So look, I think the suburban play certainly over time will develop. But the thing to note in Sri Lanka is, again, we still have under 10% condominiumized housing, and we still have ridiculous traffic on the days that we lift curfew. And when curfew ends, while we have this, a lot of buzz about work from home and all this, and that will reduce it somewhat, I personally don't feel we're going to see such a massive sea change to reverse a kind of an urbanization trend. So I feel the intrinsic city core will retain value and continue to grow. The suburbs will grow, but that will depend on how the government deals with transportation, because right now it's the transportation times that are debilitating. If that changes, I think suburban will really take off, and that really has nothing to do with COVID.
Thank you. Roshan, have you got time for one more question, or do we wind up now?
Okay, since you asked me, I just feel that Sri Lanka has missed a few opportunities in the past especially for real estate. We haven't had the right kinds of policies or policymakers supporting the industry. So there is a potential new opportunity here. As I said, there is something that policymakers could look at, making Sri Lankan real estate an attractive proposition in a very competitive environment. I mean, we're not the only people who've had single-digit mortality rates. Vietnam, I think, is on 0. Thank God that there are other countries as well, like Taiwan, etc., New Zealand. So yeah, there's an opportunity here that the government can perhaps try to encourage expats in particular and foreigners as well to invest in Sri Lanka. Port City, as Nayana said, will be something that will help in that regard. We may have more Chinese investors in an environment where other countries may have lots of pressure and scarcity of funds to invest overseas. So yeah, Thailand has like millions of apartments that are sold literally and rented to tourists. They have something like 28 to 30 million tourists a year until COVID, and many of them rent or even own apartments. Sri Lanka is not really on the ladder there. So moving forward, there are opportunities, and yes, we will get over the health impact. Most people will get back to the way they were. Some people will get into healthier habits, better eating, etc. However, I feel the dependency on information technology will be a legacy of COVID across the world, and certainly in Sri Lanka and in a commercial environment as well. That'll be interesting to watch. That's it, William.
Okay, thank you. And before I hand over to Dr. Anil Priyanka Bedavitane for the wind up, I'd like to say a thank you to all our presenters and members of the panel for bringing their expertise and experience to these discussions. We have had a fruitful and interesting webinar, which has certainly been enlightening. I trust we have all gained from it. One thing I'd like to say about the RIU before I go is that this webinar today was complimentary, organized by the Research Intelligence Unit to keep you informed of the real estate market in Sri Lanka post-COVID-19. Those of you who have been subscribers to the RIU will know that you receive daily, weekly, monthly, and quarterly reports. And if you wish to get these reports, please contact the RIU directly. Also, all those of you who have asked questions which we have not answered today, the RIU will write to you, contact you directly with responses for those questions. Now over to Dr. Anil Priyanka Bedavitane.
Thank you, William. Yeah, it has been very insightful, and there's a very good takeaway from this that the property market in Sri Lanka, the real estate market, both residential, commercial, retail, and office, we are going to have some kind of resurgence after this COVID-19, because basically, as we discussed in the location, geographic location of Sri Lanka is favorable to most of the people who have actually migrated elsewhere. And there could be investment in the country as well from that perspective. And also, I think we have a current stock of housing. I mean, I was getting to the point that with the presidential election, there were things that were done to ease the stresses that the banks were facing, especially projects that were not selling as fast, or there was kind of saturation point that had set in. So there was a correction to be done, which unfortunately the COVID-19 took away from the industry, the building industry, as well as the banks. I think the government will have to pump funds into the bank. This is going to be like the economic crisis of 2008, where the property market in the US, on the back of these bonds, housing, Fannie Mae and Freddie Mac, we had a bit of a disaster. And then it was corrected, and then we had the East Asian crisis, banking crisis. But the banks are going to be much more interested, especially if there's going to be foreign investment into real estate market in Sri Lanka. Buying, I mean, a lot of people are talking about renting renting as a short-term thing until the world recovers, because although Sri Lanka may be on a short timeline, a lot of countries are bracing themselves for a very long haul, a huge time span. Most of the countries are talking about post-COVID recovery. UK is talking, about 1 year, and I'm encouraged that the panelists were talking like three to 6 months, which I think is probably realistic, because don't forget, out of the 25 districts in Sri Lanka, I think more than half are not impacted by COVID-19. So if you have a regional isolation policy, because the best way to get over this is actually stay at home, right? There's no other cure for it. So until they find vaccines or whatever, I think Sri Lanka has to recover and guard our borders and be very careful about the recovery or post-COVID situation. I think the panel were upbeat about prospects of Sri Lanka, so I think that's a good takeaway. I think we should organize more of these kind of things, and maybe specifically how people are going to like working from home enabled apartments where you go, your office is basically going to be situated in the apartment as well. The travel is a big problem, so I think this office cum residential property, there could be a very good demand for that as well. So I think thank you, panelists, and thank you, William, for doing the moderation. So I'll make it a vote of thanks as well, unless there's one after this. Is there one, Roshan? VOT is there, or am I? Okay, I'm going to be doing it. So thank you.
It's all yours, Doctor.
Okay, fine. Thank you. And then Roshan for all the work that you with the research, which is very important to the property estate market, as well as all the developers who took part in this exercise with their insights, and of course moderating. William, you did an excellent job. So I think we are more thirsty for knowledge. I mean, this actually leaves a sign that there are more questions to be answered. How this is going to evolve, a lot of things that we don't actually have an insight right now. But from Sri Lankan perspective, I think we have a certain sense of a new real emerging, where we can secure the country, with food security and maybe less imports of unnecessary stuff. So guard our, foreign currency and get more investment into the country, into the real estate market, because it's a nice place to live. We've already known that all along, and now it's going to be a safer place to live as well. So I think thank you very much for this opportunity of organizing the seminar and taking part in it. So thank you. Thanks all. And then, of course, behind the scene, we got Malinga, who facilitated all this, and a lot of staff of, RIU, and all the participants at this webinar. It is you who made it worthwhile for us to think going forward. There's going to be a series of webinars, and we will be updating, because it is a moving target. The whole thing is a moving target, and we got to be updated. More knowledge, better life. Thank you.
So thank you, everyone. I trust you all enjoyed it. All those questions will be answered by the RIU, so don't worry. For the moment, thank you, and goodbye. Goodbye from London, and goodbye from